Hello everyone. So Microsoft in Directions North America just did a mega announcement of bringing expense agent to Business Central, and it's a wonderful capability for employees, submitting their expenses. And there's something they always have an employee and an employee ledger thing, but when it comes to submitting your bills, you always have to go through that route of pushing it through journals and whatnot. Yeah, it still does the purpose somehow, but there was a granularity with with reimbursement and kind of maintaining your expense report, document extraction when it comes to submitting your bills and whatnot. And there are some more key features to it. But before I continue with this video, I would like to clarify one thing. First things first, the feature is still in private preview. They are planning to make it public preview, I think around somewhere in next month, if I'm not wrong. But that's that. So with this video, we are only going to see the part of how we can do or configure that thing in Business Central. Okay, so there is a web app part of using the expense agent. So that's why if you notice, the topic of this vlog is basically expense management, because that feature is not yet something which is I would say available to even the selected customers or partners. So they just announced it. So let's see what it does, right? Let's kind of dive into the product. So I'm also going to browse it through along with you guys in this video and see what it does. There are some findings that I have already done on my side. So I'll start with that, and yeah, let's see how it goes. So what I understand based on the design of this feature is that somewhere there will be an employee who doesn't have to be necessarily a BC user. Okay, uh, who is going to submit their expense. Now, it could be a truck driver. So if you go to BCLE videos, Alexander Totovic really did a number on that video explaining the scenario, to be honest. So let's say a truck driver, it doesn't have to be necessarily a BC user, right? So what they really want to do is that they did a small expense or maybe a big expense. They would like to get the expense paid. Now, how did they usually do that? They submit their bill, or they send the screenshot of their bill, maybe using WhatsApp, or maybe if it's uh, a much organized system, then it would be a Teams or somewhere. They send their bill and expect the manager to get them paid back or get them reimbursed. Now, what if there is a feature which says, okay, you have an app, in this case it could be a web app, where you can go ahead and upload your bill or the receipt of the bill as a photo, maybe click that. And then once you click that, there is an expense agent, which is the step 2. It extracts the information out of that bill, okay, and creates an expense within BC, which brings to our third step. Now there is a bunch of other steps which are already also involved in terms of extraction, that user can review the bill that has been uploaded and extracted by AI, and then they can probably make changes to it, blah blah blah. But since we don't have web app with us now, so let's go with what we have currently with us, right? So you have your expense there, and in a similar way, he would like to also submit more and more expenses or more and more bills. Now, somewhere around, I would say, end of the month or maybe end of the week, they would like to compile all of their expenses. Now, that brings us to the step 4, which is the expense report. Now, all these expenses for that month kind of gets clubbed into one expense report, where you have your expense report, and on the lines you have all these expenses. Okay, you get those expenses compiled and you post it. So when you post it, behind the scene, every expense user is mapped to an employee in BC, right? So needless to say, when you post it, it goes to the employee ledger, and yeah, that's how you get paid. So that's how the general idea, how I see it works. Again, it may be different, it may be wrong, so feel free to correct me here by putting comments on the video and whatnot. So let's jump to the product and see how it actually works. So I'm on my BC, environment, and first things first, I would like to do is that I'll go to the expense agent setup. Okay. Now don't go with all the fields and everything. It has a lot of information. Again, it's kind of a work in progress, if I would say, because they're still working on that side, and that's why it's in private preview, right? So if I go to related setup, they have this very isolated but ready to eat kind of a demo data, so you can play around with the system, see what it does, what's the capability of it right now, give your feedback on it, and then kind of they can kind of work on those feedbacks. Again, it's not a proper demo contoso demo data as of now. The way I see this, if you click on that, let's see what happens. Do you want to copy existing employees to expense users? I say yes. All right. So I can see bunch of expenses got create booleans or flags got created, and it kind of created some number series allowances. Okay, I have some information here, and what else? If I go to agent access control, yeah, that's the information. We are not going to use agent for now. For this video, it's only expense management within BC. So let's see. So on my expense agent setup, I have expense users. Now, if you notice that these expense users sounded like the employees that we have in BC, right? Esther Henderson, Jim Olive, Catherine Hull, and so on. So let's take a look. If I go to Esther Henderson, it's running slightly slow. Okay, so I can see it is there, but it is also tagged to an employee number. Okay, so if I go here now and I do show details, so it takes me to an employee card, right? So far so good. Now there is one more thing. An employee, when it comes to posting of payments and whatnot, employee has an employee posting group, right? So if I go to the list, so I can see there are a bunch of new accounts which have been created here, right? One of them is expense payable cash account, expense payable bank account, expense payable credit card, or expense prepayment account. So these are some of the new fields which basically, when you post an expense report, they are kind of getting mapped with these GL accounts in order to post them. Okay, now I'll tell you the difference between all these 3-4 accounts to make a better understanding how it actually works. That's something I have browsed for this demo. Now coming back to my expense agent setup, I now also have some expense categories. So this is where they really did a number on this. So if you see here, they have a list of expense categories saying so you can play around with the system, understand what it does and how it goes, right? So if I go to any one of them, because I'm going to pick one of them for my scenario. Okay, so let's go with hotel. So I have this description, and then I have this posting description. So the way I understand it is that you have kind of a description, a full-blown description, probably, and again maybe probably it's kind of a big description. Maybe an agent can understand in terms of mapping this information to the bill or to the category when they are extracting the information out of a document. And then you have a simple posting description which says hotel stay. Now for us, the important thing is that we say posting group. So every expense category has a posting group. And when it comes to the posting group, we say what's the refundable debit account, what's the non-refundable debit account, what's the rounding account, and what's the expense credit rounding account. Pretty neat, right? So when you post an expense for an employee, you are going to have have a category at one end and you have an employee at another end, right? So based on the type of the transaction that you're doing, you are going to get kind of attached to that employee's cash account, credit card account, and maybe the other bank account. And on the other hand, you're going to have your refundable or non-refundable debit or credit account. So I'll tell you the difference between them as well in a minute. All right. So far what we have done, we have an expense agent set up, we have an expense user, we have expense category, and we have some expense posting group. I've shown you the mapping with one of the expense category here, but that's again, there's a big list that they have created here. And yeah, again, we're not going to the agent side as of now. We don't have I at least don't have full clarity to it. So if I get any, I'll create another video for it, and we can see how it goes. Now, if I go to the categories, let's try to segregate with the type of categories that they have created, and this is basically going to tell us that what it really does and what is the significance for this expense category. So first things first, you have some basic policies that if you are using this expense category, what kind of attachment enforcement policy you have. So if you are using entertainment as the category for your expense, your attachment policy says warning. So probably you will get a notification on your expense or expense report saying that you kind of missed it, and you should be probably doing that. Right now, once you do that, you also have a default payment method. And if I go here, and this is where it kind of gets interesting. So you are not using a payment method of the base app table, okay? But instead of that, you now have an expense payment method. So what it means that when you have expense payment method, you're kind of going to have it mapped with your reimbursement type. So in this case, if I say bank, so the reimbursement type is company paid. Again, it's totally configurable. If it's card, so it means that it is being paid by a company credit card, okay? Or in the third case, it would be a case where the employee have paid for the expense by himself. So in that case, it will be an employee paid expense. So just to be clear, it's very important. So you have noticed there are three, employee posting account when I was going through the expense user, right? And those were, bank paid expense, debit account, and then you have company paid, and then you have credit card, and then you have employee paid. So in those cases, you are going to map these accounts based on their reimbursement type. Okay, so yeah, like in this case, if you are going for an I should take a different example, I think. So let's take hotel for a minute, right? So when you are going to stay in a hotel, there is a probability that usually you take a company credit card, right? But when you take the company credit card, you define that in this case the reimbursement type is card, and based on that the reimbursement type becomes the credit card. So it means that whenever you are going to use this expense, you are going to use it is going to be paid from the company credit card. It will not directly per se will go to your employees expense account. Now it also has a expense group. So if I go here, so it basically kind of segregates that what kind of group you are entertaining here. It's just a simple master. It's if it is refundable or not. So it could be refundable or it could be non-refundable. Though, so if it is false, then it is non-refundable. It is true, it is refundable. But the important thing here to understand is that there are two things: whether if it is refundable or and who will get reimbursed from it. Okay, so there are two different things. When you are saying it's credit card reimbursement type expense category, then it can be refundable, but you are not going to get reimbursed from it. It's not reimbursable. Okay, so it's very important to understand it here. I'll when I create some transaction after this walkthrough, I'll explain you how it actually works. Now, last but not the least, it says expense detail required. So it says itemized, participants, per diem, and then you have mileage. So I'm not going to explain all of them to you in this video, but I'm going to explain some of them to you, and because I have to kind of do a walkthrough. So I'm going to create this video in 4 different parts, so because it's kind of going to be a long one if I don't do that. So it will also, keep the interest in the video for you guys as well. So it says expense detail require itemize. So when I do itemize, I can see there is a small button here which says subcategories. All right. So I say subcategories. So in this subcategories, I see when you go to a hotel, there's a lot of things. When you get a bill, you get a lot of things from it, right? So what is refundable out of that bill or what is non-refundable out of that bill? It's something that you have to take care of. For example, if I go to a hotel, the daily breakfast is kind of refundable, right? You do a deposit, that's refundable. You pay a fee, that's refundable. What could be non-refundable in this case? So probably if I go here, uh, yeah, I will go here and say room service and minibar, non-refundable. I'm already getting paid for my breakfast and fee and incidents, laundry as well, so I can avoid room service. So room service is non-refundable. I say this as false. Okay. All right. So we're going to use this expense category in a minute, right? Now, what next? So I have my expense user categories, posting group. I have seen this. Now there is one thing here. It says apply rules. So I'll say this as true as well. I'm not going to enable approval workflow. So let's keep it very simple for now. So let's see. So before jumping to the expense, I will go to expense management rules. All right. So they with this default kind of isolated demo data, they have also done a very good thing, which is done in a very fine way, that they have created some rules as well to explain how the functionality really works, right? So I'll take one example here. So mileage, right? So when you do a mileage, when you claim for a mileage, okay, so I would like to specify that the maximum amount of mileage cannot be more than 300, right? So what it really means is that if you're going above 300, then your expense will not be approved. It's kind of a violation that you're kind of violating the policy, and it has to go through an exception in order to get it approved. Uh, I will not go to morale. Let's go to, yeah, per diem. So that's another very good example. So per diem, expense category for the expense location in Canada has a daily rate of 125 CAD. Okay. So what it means that it often happens that when you are going to create an expense document or you are going to claim your per diem expense for a specific location, the per diem amount for location to location get varies, right? So in those cases, you can kind of configure the rules here. So when you configure the rules here, it's going to take the amount automatically from this configuration, and it kind of also helps you to see if you're not violating any policy for it, right? So that's where expense rule, and it has more capability than I'm saying it right now. So let's say entertainment. So if you're going for an entertainment kind of a category, then you have to say that every time if you are going against the condition, you have to give a justification. What are the conditions? The condition says that you have to give a justification if you are going above 500, or if you have a maximum amount of 1000. If you are going against the condition, that then you have to give a justification for it, that why you are doing it. Then again it goes to it is subject to approvals from the admin. If the because let's say there's a case of you're having a customer meet or something, for that you want to do a small gathering, it may be a a bar or something. So in that case, you are going to claim such kind of bills, right? So in those cases, if your justification is sound enough, then you are only allowed to post an expense above and beyond this limit. So these are again kind of rules which helps you to keep your system intact within the policy of the document, and you can always have this control within your system to say, okay, I'm not going above and beyond over my limits, right? All right, so now the main part. You have to file an expense. Now, before I jump to this, I would like to explain one thing. I'm going through expense, then expense report. But if you are just a BC user using expense management only in BC, you do not have to go through the route of creating an expense, then an expense report. I'm just explaining you how what's the capability of the system right now, and it may be changed, but I'm just showing you how it really works. But if you want to jump directly to the expense report, go ahead and do that. There is nothing wrong in it. Okay. So I have an expense. I say new. It will generate a number, and I'll say Esther Henderson. So first things first, I will try to apply for a hotel. So if you can see here, as soon as I have done that, it says that attachment is missing. Why? Because the policy of my expense category says attachment enforcement policy, that it has to be defined here. It should be a warning if you are not attaching a document. Let's see what happens that if I remove hotel and I go to my list, I search for hotel. Then from here I say edit, and instead of warning I will say error. So what happens now? If I select this, so on my right side there is a fact box which says document attachment is mandatory, right? And then it also says one more thing, that itemization is required. So these are kind of violations that kind of restricts you in order to see whether you are not going against the policy, you are not getting reimbursed for something for which you are not supposed to get reimbursed, right? So these are some of the checks that you have there. Okay, so it says itemization details are required, and I have an attachment to put as well. So I'll go here because I don't want to put an attachment. So I'll remove this. Violations are gone. I will go back to hotel, then manage, edit, and I'll put it back to warning. That's okay. I can deal with the warning, right? Okay, so I have my warning here, but I still have to define the itemization detail. Why? Because if I go back to my expense category, it says expense detail required as itemized, right? So how will I do that? So I'll go to my expense, and there is a button which says itemizations. So in this I will try to pick them one by one and say breakfast. Okay, I took this daily rate 100, and then I would say laundry date, I'll say 40, and then we also added a expense itemization which was non-refundable, right? So we say room service, that's non-refundable. Okay, so I do this. I say 100. Okay, so the total says 240. So if I close this, yeah, so it says this. But now if you notice, let's see what happens here. Okay, so I have this reimbursable amount as minus 100 because I kind of have this $100 or on my itemization for laundry, which is not supposed to be the case. Okay, and it also says that I have to put here 240, so I'll put here 240, and out of that 240 my my reimbursable amount is minus 100. That means when I post this expense, there will be a $240 which is refundable, but out of that $240 refundable, there is $100 which is in negative, something which the employee has to pay me back to the organization because he used the company credit card on something for which he is not allowed to use in the trip. All right. So now apart from that, on the right side you have this nice fact box showing the information. So you have $240, and then you have this minus 100 expense date, blah blah blah. As soon as I selected the category, I can see this action here which says view applied rule. So let's do that. So it will directly take me to that rule which has been applied to the expense document. Yep, pretty neat. Okay, so that is that. Now what happens if I make this as false? So if I, let's say I don't want to see that it is a refundable bill. I think I cannot do that. Yeah, I cannot do that. Sorry. I'll explain another example to you. Yeah, there is a restriction on this. Okay. So what I'll do now, I'll just release this expense, and I'll do another, expense for category where it is reimbursable to the employee, completely reimbursable to the employee. Let's see. Yeah, passport. So I'm going to expend something where, I paid it completely for my cost as an employee, and I would like to get it reimbursed. So it doesn't have any rule violation. It is not attached to any rules because there is no rules created for this expense category. It is pretty straightforward. So I'll just put $50. That's the amount. And probably someone might say that I can, upload the image of the passport if it is something I got. So let's see. If I say it is non-refundable, then you cannot put any non-refundable amount. But if I go here, it's $50. One would say non-refundable would be $10. Then in that case, $40 become reimbursable. Okay. So again, just to clear one thing, there's a big difference between refundable and reimbursable. Okay. So it is $50 refundable, but out of this $40 is something which is going to be reimbursable. Okay. So let's keep it very simple for now, right? Let's keep it like this. $50 totally, reimbursable. So I say release. So now I have two expenses. I would like to now file those expenses to an expense report. So I select this. I say create new expense report. So it gives a very good option saying, do you want to add, how do you want to add expenses? Maybe do a new expense report or to an existing one. So I'll say okay. So it says new expense report is created with number this, blah, blah, blah. And there we have it. So I have this new expense report with me. So let's slowly walk through this entire page and let's see what it does, right? So on the general tab, you have your expense user number and you have your expense report, posting date, dimensions on my right, and you have this reimbursable currency. I will explain this example as well in this video before winding it up. But yeah, before I do that, I would like to explain what I just did. So if I go down, I have a hotel stay, right? It was amount of 240, and then the LCY was 240. Reimbursable is minus 100 because I have to pay, for the room service that I have paid. But I have also paid for my passport, which was $50. So in total, my reimbursable amount is minus 50. So the employee still have to pay from his own pocket to basically cover this expense report, right? So, but the total refundable amount is basically 240 plus 50, right? So far so good. So let me try to do a preview posting. So you have preview posting, you have post and new. Simple way how they basically do it in other documents. So they kind of aligned it with this whole information. So let's see, there are some actions here as well. So you have dimension, you have comments, then you have bill information. So you're not going to use it in this case, but it's basically when you are kind of attaching your expense to a project or maybe to a customer, or you're getting it reimbursed from a customer, or you already have a posted purchase invoice created for it and you just want to tag it to that purchase invoice. So you can do that as well, right? So we are not going to take that complex examples for now. So there was an itemization detail at the time of expense that was created. So what I'm really going to do is that let's say if I try to change something here, I'd say deposit and today's date, I say $200. Okay, so now it says that it should be 440. So let's see. Okay, so I have this 440, and then I have minus 100, then plus 50, and to this. So yeah, I still have to pay it from my pocket because I kind of did a $100 expense on my room service. Okay, so let's see. We have some reports here as well. So let's take a quick look to that. Let's not go into too much detail of it. So you have a expense report, detailed report. If I do preview, okay, pretty neat. I mean, decent level of information. I get the overview of my expense report. It gives me an idea. What do we have here in summary? Okay. Okay, so it basically gives me a summary for this specific expense report, overall what it does and what it does not. Okay. And then if I go to expense report cover page, let's see what this does. Okay. So there is some level of details that I can see here. It says, the reimbursable amount is minus 50, and then you have your total amount to be paid by the company 440, because yeah, 440 was it, and the refundable is 390. Yeah, that makes sense. That makes sense. Okay, so now let's kind of try to post it. Yeah, so I do post, and I have a posted document which is now a posted expense report. Okay, so I have the statistics, and in this statistics I can see the amount, the currency which has been used. So if I go to lines, I can see there is an itemization. Okay, I would love to see refundable or non-refundable field here, but I think that's okay. And if I let's see what it has done behind the scene, right? That's kind of more important for me. Okay, so now I have an expense, an employee ledger entry, a detailed employee ledger entry, posted expense report that which I was we were on it already. You have an expense ledger entry, that's a new table which has been created this time, and then you obviously have your GL. So let's go through them one by one, right? So I have my employee ledger entry, which is, I'm assuming, yeah, 50 is something that the employee has to pay from his pocket, so that's why that's employee ledger entry that has been created, right? Now, needless to say, if it is something the employee has to be provided, I mean, to be reimbursed, then the amount would have been in negative, yeah. And then you have your detailed employee ledger entry. It's kind of connected once to many relation. Oops, expense, posted expense report. We've already seen it. Okay, expense ledger entries. Let's take a look what this does. So the way I've seen this is that they kind of have this amount where a screen where it shows the detail of that expense report, that what happened to, line by line kind of an information. So if I go and take this hotel stay, you will notice that there was an original amount 440. The amount which was posted is 340. Why? Because 100 was in non-refundable, right? It's something which is not refundable to the employee, and or to the organization as well in this case. And you have this 100 as non-reimbursable, which has been charged to the employee, and yeah, so the refundable becomes 340. So it's very important. You can see here they have kind of segregated between refundable and reimbursable. It's not the same thing, it's a different thing. So I got confused in the beginning, but it's very important that we understand its difference. And then you have your passport expense category. It was 50, and it was pretty neat. I mean, straightforward transaction. Employee paid for his passport expense, and now he's getting reimbursed. So the entire amount was reimbursable. And the most important thing, GL entry. Okay, let's see what we have here. Okay, so 340 and 340 here, they're kind of connected. Oops, sorry. Okay, they're kind of connected to each other because 340 and 340, if you see the GL account here, because it's again kind of very important. So company credit card, so the employee, and on the employee posting group you have this company credit card, expense paid by company credit card account. So that was the account which was taken here. And then you have this account, which is travel expense, the account that was mentioned in the expense posting group of that expense category. Then you have this 50, which is employee payable account, because employee has to pay this. That was there in the employee posting group. Then again, you have this, travel expense for $50 for the which I think, yeah, this one should be on the expense category itself. And more importantly, you have this other incidental revenue for which I think it was mentioned for the non-refundable account, right? So yeah, that's basically how they have mapped it. So one more important thing that I have seen in this functionality, and there are more to it. I mean, there's per diem, there is mileage and whatnot. But for me, the important thing here is that, let's say I have to file an expense, right? And I'm kind of doing a multi-currency transaction. When I say multi-currency, is that within a month I have traveled to different countries, and I'm now kind of getting reimbursed in for them. Now there's an important thing connected to it, is that if I go to my expense agent setup, and this is again very very important. So let's take an example, right? I Today I'm standing on the 28th of April, right? So I paid something in dollars today, and my company's in which is in BC, it has the LCY in, I think, GBP, if I'm not wrong. Let's see. I don't see it here, but I think it's GBP. Okay, so it's GBP, but I paid in dollars. Now the important part here is that I will file my expense report. So I will submit my expense on maybe on to the 28th. That's totally fine. But I'm going to file my expense report at the end of the month. Given some circumstances or condition, based on today's expense, I might have I might have paid $100, which may be subjected to how would I say 300 GBP at that time, right? And when I'm going to file my expense report, which is going to be the end of the month, which is, let's say, 30th of April, at that time, that conversion brought my $100 expense to, let's say, 80 GBP. So in those cases, I would like to make sure that there is a policy that I know based on my company's I would say reimbursement policy. Yeah, so there is a field here, it says exchange rate for expenses. Now what it means that when you are going to so you are always going to be paid by your reimbursement currency. I'll show you an example which kind of gives you an idea how it really works. That so but it's all about dates, right? So you paid $100 today, and you want to get yourself paid based on the expense date. Okay, so that's basically what it does. So if you are saying expense date, so you are going to get paid based on the $100 based on that day. And if you are going to choose posting date, then whatever the exchange rate is on that day, you're going to get paid on that expense date. Now the important thing here is that if you are going, there will be a rounding difference. So when you're going to post it based on the expense date, so we'll see an example in a minute, but if I go to my expense users, I go here, employee, and if I go to my payments, okay, so you have this you know rounding accounts here, which kind of helps you to kind of post it to the post the rounding difference to a specific GL based, because there will be a difference in the rounding when you are posting something on today's date, because BC is going to post that transaction on that day, but there will be a rounding difference based on the exchange rate. So let's take an example for this, right? It will give much more clarity to what I'm saying. All right, so I'm going to file an expense, and I'm going to file it. First, let me see the currencies in my system. Okay, so I'm going to go with AUD, and if I go to my exchange rates, yep, I think that would be the right example. So what I'm going to do here is that 31, 26, I'll say 50, I don't know, so 50 here as well. Okay, so I have two exchange rates defined for this. So I'm going to make one expense on 1st of January, and then I'm going to get it reimbursed on the 31st of January, right? So I will say my posting date is 31st of January, and what was the year on it? Yeah, it was 2026. So let's keep it 2026 here as well. Okay, so I say, I don't know, maybe passport. All right, so I paid for passport with my account, and I paid it in Australian dollar. Again, a very hypothetical example, not a good way, but right now the concept is to make sure that you're kind of understanding the concept of it, right? So I say 50. Okay, so 50 in Australian dollar, and based on my expense date, uh, the amount becomes, the reimbursement will happen on the 17.15. So you can do the math, it kind of gives you an idea. And of course you have your refundable LCY, which is 34.130. But then I'm also going to do a hotel expense in AUD. So I'm going to do it on my 100. So this time it's not going to be reimbursable, but what if I change its type to cash? Okay, so now both of them are in cash to me. Yeah, that makes sense. That makes sense. Okay, so right now that's where we are. But before I jump to something else, so it says rule violation. So there is one thing I completely forgot to mention. On the expense, even you have a rule violation, you still allowed to release the expense. But if you are on an expense report, if there is a rule violation, you cannot go forward by just posting the expense, because you have to define the uh, you have to clear the violations in order to complete the expense report. Okay, so this one here says I have to define details of 100, then there is an itemization also required. So I'll go here, and to keep it simple, I'll define 100 here. Okay, the violations are gone. So far so good. So let's do a preview posting, shall we? Now you notice I have 5 GL entries created, and what it has done. So it has posted the transaction in my source currency, and it has pretty much done the right thing. All the balances and everything have been posted there, and I can see, at the end of the day. Let me just double check the GL accounts. So yeah, you have this invoice rounding, you have this other expense payable, invoice rounding again. Yeah, then you have this employee payable account. Now what happens if I post this transaction in a different currency? So for example, one of them was AUD, then I took another one which was, I don't know, in CAD probably. So now that it's kind of a multi-currency transaction within the same situation. So first things first, you're always going to get reimbursed in your reimbursement currency, which is on top, right? So if I go here, do a preview posting. Now I have 4 GL entries because I don't have a rounding difference, I'm assuming. And yeah, if I do this, let's see if it is summing to 0. Yes. So it again kind of explains you, because this time you don't have a rounding difference. In this case, whatever you have posted based on that date, it has been posted to it. Now what happens that if I change the currency on my header to let's say USD, so you do that, it's going to ask you that you have modified the reimbursement currency, which will also update lines, blah blah blah. So the amount, now you will see the reimbursement amount here is going to be in USD. So when I'm explaining this multi-currency thing to you guys, it's always about getting the reimbursement amount to the employee, right? So at this time, I want to make sure that the employee was asking something to be paid in USD. So let's take this example. If I do this USD and then I do this USD. Now in this case, it doesn't really matter what the rounding difference is, because he wants to get paid on 150 USD, so he should get 150 USD. That's basically the bottom line. And for us, we are going to always do the reimbursement in the back calculation, or so refundable in the back calculation based on the posting date. So, and also if I scroll down, I think probably, yeah, it doesn't show here, but it's also USD. Okay, so I do preview posting. 3. There you see. So the employee will get this 150 as USD, right? So that's the source currency amount for us. But on the other hand, we are going to back calculate it. It's 97.32, but the employee will get paid in 100 USD. So if I go to the employee ledger entry, let's see what we have here. So yeah, there you can see it says 150, and I'm pretty sure there must be a currency field behind the scene which says USD. So yeah, and there is more to it. To be honest, that's what I have been able to explore so far. Feel free to drop off your questions, and I will be making more videos on it to explain you how we calculate per diem, how it actually calculates mileage, and how we can kind of do more type of transactions and scenarios. So if you have any questions on top of it, feel free to drop some messages on the video, and yeah, feel free to reach out. I will be happy to answer them. Thank you and have a good day.